Hello, namaskar viewers. I am Sanjeev Pandya welcoming you to this week's episode of the Tax Talk with AJ. The show is brought to you by Science CPS Services, a professional accounting firm located in state of New Jersey, multiple locations. They can assist you with any tax matters, personal or corporate, business related, and beyond that, they can help you also to have a virtual CEO, CFO, bookkeeping services, payroll services, accounting services for your business, so that way you can completely focus on your business. And once you have your taxes done by Science CPS Services, you can really focus on your work life, because Science CPS Services believes doing taxes right for their clients. You can reach them at 908 888-8900. That's a 908-888-8900, or visit sciencecpsservices.com. With that note, I'd like to welcome Mr. AJ Kumar of Science CPS Services, with over 25 years of experience being a CPA and a CVA and MBA and other licenses and degrees as well, who brings his knowledge and expertise into the show to guide us and to inform us about the taxes and the beyond the taxes. That's why we call the show the Tax Talk with AJ, right here on ITV Gold. AJ, good to have you again.
Thank you, Sanjeevji. Thank you for the kind introduction.
You're very welcome, sir. You deserve it. Science CPS Services deserve it, because I know Science CPS Services has a long list of very satisfied clients, and that's why it's worth to mention the services, the expertise of Science CPS Services. All right. They say, you work hard in your life, but then you look forward to a retirement. Who doesn't look forward to a retirement? Even though people say, why should I retire? Because if I retire, if I'm at home, I'm going to get bored, but they still want to have some retirement. But at some point, obviously, one has to retire. And when you retire, you want to make sure that you have enough retirement funds available to pay your living expenses, because that is the only funds. Retirement accounts and funds will really, get you going rest of your life. So let's talk about retirement funds. How many of them are there, and what are they? Each one specializes in a what category? Let's discuss that with AJ. So AJ, retirements, qualified retirement plans.
Absolutely, Sanjeevji. Very well, sir. Everybody look forward to the retirement, and then you have to have enough money to survive. Retirement means you're not actively working in making money. You want to enjoy your life. You want to not be doing something only to earn money, only for the sake of making money. So the question we are typically asked, Sanjeevji, how much money would I need to retire?
Yes.
Before I retire, before I start thinking about the retirement, I have to know how much money do I need and how do I get to that point. Let's say I'm 50 years old and I want to retire at 65. So I have 15 years before I retire to get to that point, to make that much money, to gather that much money that I need to retire. Let's say if my life span is 80 years, then I need to survive for additional 15 years after the retirement. So I have 15 years now left to get to that much money to make sure I have 15 years left after the retirement. So the formula that we typically use, whatever your current living expenses are, whatever living expenses that you want to have after the retirement, multiply that number by 20, give or take. So that much money you need to retire. Let's say if I need $100,000 to live comfortably in my retirement years. So in that case, I need $2 million. If I need $2 million and I need to collect this $2 million, I need to get to this $2 million in next 15 years. So now you need to back calculate, assuming the average market growth of 8%, 9%, 10%. You need to calculate how much money you need to save every month, every year to get to that golden point, to get to that $2 million in this example, in order to retire.
And, obviously the question when you ask, how much money do I need to retire? The answer to that is very simple, a lot of money. Because cost of living is really, really going high. And, every year it's going to go high. It's not going to come down. So you're going to need lots of money to retire. Now let's talk about, qualified retirement plans. One is for the contribution, defined contribution. Other one is for defined benefits.
Absolutely. So when you say qualified, the word qualified typically means when it comes to the retirements, that this plan, the contribution to this plan is tax deductible. Let's say if you have heard of lot of plans, IRA, 401k, when you take money and put this money into these plans, it lowers your taxable income. In the year you put the money, in the year you contribute to this plan, your taxable income goes down. So typically, the retirement plans that are giving you immediate tax benefit are referred as qualified retirement plans. The retirement plans that are not giving you immediate benefit, tax benefit in the sense where the contribution to those plans is not immediately tax deductible, those plans are referred as non-qualified plans. Now, the next thing you want to understand when it comes to the retirement plans is what's the defined contribution plan as opposed to defined benefit plan. So as the word says defined means fixed, that you can define. And the second word is contribution or benefit. Defined contribution plan means the contribution, the amount that you contribute is defined, is fixed, in the sense that you will be contributing $1,000 every month, $1,000 every year. So the contribution is fixed, is defined, as opposed to defined benefit plan that are back calculated where the benefit is defined. At the age of 65, I want to make sure my benefit is $100,000 per year. In that case, an actuary, somebody who calculates these numbers, will try to back calculate for you how much money you need to put in now and or every year, and these computations have to be done every year to make sure these actuaries are keeping up to the market rate, market growth. So these computations are done every year, and a third party, they are called actuaries, they will calculate it for you and they will tell you in order to get to the defined benefit that you want to achieve this year, this is what you have to contribute. So the benefit is defined. The contribution changes every year in defined benefit plan.
Okay, very well said. Now let's talk about, let's say, defined contributions. Let's talk about the plan in a little bit detail. Funding source, investment risk, and the other things associated with payout structure and probability and whatnot. Let's give a little bit of overview on those.
Absolutely. So all these plans, defined contribution plan, defined benefit plan, they are IRS defined definitions, rules around it. They dictate how you, which plan you can put the money in. They also dictate how much money you can put in. They also dictate when you can take it out, how much you can take it out, what are the tax consequences. But none of these plans tells you where you have to put the money in. Meaning you can choose qualified plans, non-qualified plans, defined contribution plan, defined benefit plan, any plan of your choice. So the rules are what type of plan you have, when you can take the money out, how much taxes you have to save or pay, what are the tax consequences of early withdrawal. Those rules are defined for each plan. None of these plans tell you if you have to invest the money into stock market, ETF, mutual funds, savings accounts. That's not defined. You decide how much risk you have to take. Generally speaking, older you are, or closer to the retirement age you are, lesser the risk you want to take. If you are 20 years old, even if the market crashes, you have enough time in your life before the retirement, so the market will come back. But if you are already 60, you don't want to be taking too much risk. So all these plans that we have, qualified, non-qualified, defined benefit, defined contribution, they tell you the tax consequences, tax rules, the age. None of these plans tell you where you invest money. That you have to define. You have to decide with your wealth planner, with your age, depending on how much money you have, depending on how much other liquid assets you have, in case this asset is not performing. So that will be decided by you based on your own situation.
Okay, that is interesting. So that we talked a defined contribution plan. Now let's talk about defined benefit plan. Meaning, what are the significant differences between contribution and benefit? It's very much self-explanatory. Contribution is what you contribute to it, and then what you're going to get at the end of the day. But defined benefits, is it better than a contribution plan?
Defined benefit plans are typically very expensive because in defined benefit plan, you don't know how much you have to contribute. You need a third party to decide for you how much contribution you have to make. So the administrative expenses for defined benefit plans are typically higher than defined contribution plan. The amount of money you can contribute to a defined benefit plan is typically much higher, especially if you are older. than defined contribution plan. A defined benefit plan typically makes sense when you have, let's say, a professional office, a doctor's office, where the doctor is 60 years old and there are 2, 3 employees, and those employees are much younger. So this doctor, because he's much older, can contribute a lot more money for himself, and he doesn't have to contribute as much money for the employees. Please remember, all these plans, in order to be qualified plan, especially in a business scenario, what you contribute for the shareholder, what you contribute for the owner, has to be similarly contributed for all the employees as well.
Okay, very well. So there you go, folks. Defined contribution and defined benefit plan. That is to start to let you know about this qualified retirement plans. After the break, we're going to go into more detail. There are 7 very popular, very reasonable, and all those 7 are suitable to fit almost each and every single person, because everybody's situation is different when it comes to taxes and employment and whatnot. So these 7 plans, one of them would definitely fit to somebody, the other one would fit to somebody else. So AJ is going to give us an overview on those 7 plans. Right after this messages, you're watching the Tax Talk with AJ on ITV Gold. Stay with us. Welcome back to the second half of the Tax Talk with AJ. This is the weekly show, brings you all the latest that you really need to know when it comes to taxes, personal taxes, corporate taxes, or any matter which is related to taxes, and you get all the information you need to know courtesy of Sai CPS Services. Mr. AJ Kumar of Sai CPS Services comes in every show, every week, to guide us and to inform us when it comes to taxes, what are the changes and what's the best policy and whatnot. So we're talking today qualified retirement plans. But before that, I have a very important announcement to make and an invitation for you to come and be part of this. You see this piece of paper that I'm holding? This is the event which is happening on July. What's the date?
July 30th.
July 30th. Okay, 1, 2, 3. All right. So, viewers, I want to let you know about this event, which is scheduled to happen on July 30th. And this is happening right here at ITV Gold Auditorium. As you can see, the title of it, Millionaires Tax Success Formula. This will be hosted by Mr. AJ Kumar of Sai CPS Services, along with qualified CPAs and the CAs, the individuals. They're all going to be giving a lot of good information that you really need to know when this Millionaires Tax Success Formula. It's happening on July 30th. You'll see actual flyer on the screen as well. Numbers are there. Information to get the tickets and everything else is also going to be there. Be part of it. Come and attend this event. You're going to learn a lot, and that will definitely help you when it comes to your taxes. So, AJ, you have planned this event. Just give us a little bit information on it.
Absolutely, Sanjeevji. This is our 3rd year. Last year in this event, we had about 132 small businesses attending the event. A lot of people keeps talking about these millionaires don't pay any taxes. So instead of whining, crying, blaming these millionaires, learn how these millionaires are not paying taxes. We'll be discussing very practical, ready to use plans that can be used for everybody. If you are making any money, this is the event for you. We are expecting over 200 people in this event this year.
And you should be part of it also. As you will see the flyer during the show on the screen, make a note of it and give them a call and reserve your seat, and bring your friends also to let them know about this event so that way they can learn something about millionaires taxes. All right, moving on to the show, viewers, I am very happy and proud to announce that Suhag Jewelers, one of the most known jewelers, one of the oldest jewelers, and one of the most reputable jewelers right here on Oak Tree Road in Edison, has joined the Tax Talk Show, has become one of the sponsors for the Tax Talk Show. And we are happy to welcome Suhag Jewelers to this show, the Tax Talk, or even when we do the Business Talk later in the year. Suhag Jewelers will be part of that, and we thank Suhag Jewelers for being part of this show. Now, investing in a gold is the safest investments that they say, because every year the prices of gold significantly, goes higher and higher. And that's why I suggest that, yes, investing in the gold is the best and one of the most safest investments that you can have. Now, to get more information about purchasing gold and gold related items, and you need an advice on what to do with the gold that you already have it, but you want to upgrade it and then get the some designer jewelry, gold jewelry, which matches today's fashion and style. That all can be done when you visit Suhag Jewelers showroom on Oak Tree Road in Islin. So Edison, Islin, same thing. So visit Suhag Jewelers showroom on Oak Tree Road in Islin and get all the advice that you really need to know about the gold jewelry you have or the gold jewelry that you want to buy. And then you can also buy gold bars at Suhag Jewelers. So check out Suhag Jewelers showroom on Oak Tree Road in Islin. And every week, AJ will announce the gold price of that day or of that week right here in our show. So AJ?
Absolutely, Sanjeev ji. So right now the spot price for the gold per ounce is $3,318. The good thing is this is one of the lowest price in last 30 days. The lowest we have seen is $33.15, only $3 difference compared to the lowest price. The highest we saw in last 30 days is $33.33. 3,333. So with the war going on, with a lot of uncertainty going on in the market right now, at least in last 30 days, today's gold price is one of the lowest ones. So if you are thinking about buying gold, it's a good time.
All right, very well. Thank you so very much for the gold prize announcement. And once again, we welcome Suhag Jewelers to our show. Now, let's quickly move on to the 7 different categories of the qualified retirement, starting with one of the most popular retirement plans, which is called 401k.
Absolutely, Sanjeev ji. So 401k is a retirement plan that's offered by the employer to the employee. If you are working for yourself, you do not have the payroll, you cannot have the 401k. There's a different plan for you. 401k can only be offered through W-2 to salaried employees, depending on how old the employee is. If you're under 50, the limit is 23,000. If you are over 50, the limit is 30,500. Additional 7,500 you get that you can contribute to the retirement plan. Generally speaking, it's a qualified retirement plan where the contribution going to the 401k can be used against dropping the taxable income. It can offset your taxable income, so you have immediate tax benefit. At the end of the day, when you take the money out at the retirement, you may have some taxes on the gains on the money that you are making.
All right, so that's a 401k plan. Like I said, one of the most popular plans. And then let's just go into the other IRA plans.
Absolutely. So let's talk about the solo 401k. As we said, 401k plan is typically meant for employees, not for business owners, where you have the W-2 salary. Solo 401k is typically meant for a single business owner, where you don't have any employee. I'm the employee, I'm the business owner. That's why the name says solo 401k. The limits for solo 401k are much higher. They typically combine SEP with the 401k. Again, this is a qualified plan, so the amount that you're contributing to solo 401k can be used to reduce your taxable income immediately. A lot of people, depending on how much income you have, especially if it's a single member LLC with a lot of profit, or you have a 1099 income, in those cases, solo 401k plan is a great plan.
Okay, so just to wrap it up, 401k is for the medium and large businesses. That's one of the most popular plans. Solo 401k is for freelance and single member LLCs and everything. Now let's talk about 403b. What is the main thing about 403b?
403b plan is exactly same as 401k plan, except 403b plan is meant for non-for-profit company. If you have a non-for-profit company, you have employees, and you want to say 401k, I want to offer 401k plan, your plan is referred as 403b plan as opposed to 401k plan. Exact same limits, exact same concept, qualified plan, contribution to the plan are tax deductible immediately. It's a form of 401k plan that's offered to non-for-profit companies.
Okay, very well. SEP IRA. This is something that I think our viewers would definitely want to have more information on SEP IRA.
Absolutely, Sanjeev ji. SEP plan is defined as self-employed people. So if you have an LLC, if you have an S corporation, you are running your own payroll. The concept is if you have an S corp running your own payroll, in that case, up to 25% of your payroll amount or $70,000. Whichever is lower. If you have an LLC, profitable LLC, so whatever the profit for the profitable LLC is, 20% of the profit or $70,000, whichever is lower. Take an example, if your payroll is $100,000, you are the only employee, you have an S Corp, 25% of this 100,000 is 25,000. So even though the maximum is 70,000, you will be allowed only 25,000. So 25% of the payroll or 70, as opposed to 20% of the profit for an LLC or 70, whichever is lower.
Okay, very interesting. Is there a plan called Simple IRA plan? What exactly is Simple IRA?
Simple IRA plan is typically offered for small businesses. 401k plan, or for that matter 403b plan, they have a higher administrative expenses. There is somebody who has to calculate the amounts, make sure there is a portal where employees can go and decide where to invest the money. There has to be certain filings that have to be done at the end of the year. So it costs thousands of dollars to offer 401k plan or 403b plan for a small business. So they created a simple IRA plan where the limits for the contribution is lower, comparatively speaking, it's higher than IRA. So it's a simpler form of IRA for small businesses where the administrative expense is much lower.
All right, so 401k is a common plan because, the things about 401k plan 1 or 2 or the other things always carries into the other plan. Let's talk about 457B plan.
So you're 100% right. And we keep going back to 401k plan where we said the contribution limit is 23,000 plus 7,500. It's the same concept. 401k plan is for small businesses, small to mid-sized businesses. You have to have employees to offer 401k. We said 403b plan is for non-for-profit companies. 457 is exact same as 401k, is a form of 401k plan meant for government employees only. So there are certain additional benefits that are given. So there is no early withdrawal penalty. There are certain, the limits are same, the rules are same, 401k, 403b or 457b, except 457b is meant for government employees.
All right, and out of those 7 plans, now the last plan is 412A, I think they call?
412E.
E, okay.
So 412E plan, 412 they call it, is typically funded by annuities and life insurance. So you have to be careful when somebody is selling you 412E. Typically, these plans are not qualified plans. They don't really create immediate tax saving. There are a lot of wealth planners who will try to convince you other way around, unless it goes through some sort of insurance plan, some sort of business insurance, partners insurance, or buy-sell agreement type of insurance. Generally speaking, 412E plans are not a tax deductible plan immediately and are funded through annuity and life insurance. These are the plans that are actually protected from any lawsuit. And you can contribute large amount of money, and they provide guaranteed benefit at the time of retirement.
All right, very well. Now with that, we're going to wrap it up. But just want to mention one important thing is that you came to know all those 7 plans under qualified retirement plans category, whether it's a defined contribution or defined benefit plan. So now you know it. Now, AJ, if someone comes to you, let's say potential client or existing client, and what do? You look at their tax situation, and then you look at their investment, see what's there, what's not there, and then you suggest if any one of these 7 plans fit for them?
Well, it's slightly more than that. Not only the taxes. First, you do the compliance to see that they are green. They are not having any missed filing or any liability behind them that will come back and haunt them. Then you try to clean up their tax situation. Then you sit with the client to understand what their goal is, how old the client is. Two clients with the exact same situation may have 2 different plans depending on what their goals are. How old are their kids? Do they need funding for the children's education? If they own their own business, do they? So
basically, you give them all. You look at all the avenues, and then you advise them.
You have to look at a lot of information before you can create a plan around.
Absolutely, that's what Sai CPA service is all about, because they will advise you and guide you in the right direction to pick a right plan for you to invest money, so you can enjoy your retirement life. With that note, we come to an end of this show. Today's episode, the Tax Talk with AJ, with the qualified retirement plans, is the topic. AJ, thank you so very very much.
Absolutely.
Once again, reach out to Science CPS Services 908-888-8900 or visit their website sciencecpsservices.com. Until we meet again, same place, same time, I am Sanjeev Pandya, wishing you all happy and tax-free days ahead. So long.
Thank you.